All right. Good morning, everybody. As usual, the founder's note is not done yet for the AM session, so I shared the PM session, which I gotta say, I kind of like that. Just only sharing the AM kind of left out all of these really good, juicy nuggets that they were putting in at the end of the day. And so I think it's a good read. It's not just trying to figure out what happened yesterday, right? They have enough stuff in there that actually gives you some um, insight into what we could expect today, as well as giving you some ideas of what happened. And a lot of these tools are complex, complicated even. So I like it when they lay out some visual cues or things that you can use their tools for. One of the things that I picked up this morning is that zero gamma is supposed to be above the volatility trigger most of the time. And right now it's not. They have flipped. So I added a little bit of language to their indicator. Today I'm going to send them an email and see if they'll just add that to it. I don't think they need to use the language that I used because I just needed a way to identify quickly that the volatility trigger is not underneath the zero gamma level like it should be. So I used the word contango and backwardation, but I mean that's not what it is, right? If you know what contango and backwardation is, then you'll understand my logic here. But this isn't contango and it's not backwardation. It's just the idea that one is supposed to be above the other and it's not, and so they're considered backwards at the moment. It's a good way to. We'll see what they say. Maybe we'll talk it out and we'll get them to add some sort of signal or alert when those two are not in the proper order. It's something that they referenced anyways in their founder's note. It is a good read. Yeah. And, I like the pictures. I mean, the pictures really tell a lot. And if you have access to their tools, those pictures really kind of highlight how you can use their tools better. And I mean, that's always a good thing because their tools are complicated. So it's worth a read. When I get the AM, I will share it. One of the things you always want to look for is that spot gamma index. I don't know how many videos they might have it, but in their blogs, this is where you start the discussion about how to trade when price gets to the edge of a range, right? We're always focused on price getting to a pivot point. What are we supposed to do with that pivot? Sell into strength or buy into strength? Sell into weakness or buy into weakness? A lot of times, the candles will lie to you. The candles will make it look like price is breaking out. It'll give you every signal in the world that it's bullish. But if you already know you're supposed to sell that strength, then you know that the candle pattern that you're seeing is a lie and you're ready to short it. I teach that a lot with my coaching clients that struggle with ranges and how to trade the edges, is the idea that you got to have a bias a lot of times. You got to let the bias steer you towards what you're supposed to do on the edges. Well, this spot gamma index goes right to the heart of that in a broader sense, obviously not just whatever time frame we want to trade. So that's a number that you want to keep track of. It goes from -4 to +4, which is a little weird. I mean, most places have 1 to -1 or from 100 to -100, that sort of thing. Why 4? I don't know. I don't care. It's just weird. There's always something, right? Always something new to learn and a better way to do it. Been a lot of data coming out on the UK. They had a couple of earnings misses over there from some really big names. And, with Japan now looking at recession and putting out more statements today about their forward future outlook. Europe, Germany in recession, this is just one more signal that things are starting to, feel the crunch, so to speak. So the UK down the most, 0.75% and a little bit. NASDAQ down a 0.5%. Small caps right behind that. Hong Kong at 1/4. The S&P below 1/4, and the Dow closer to 0. Interesting thing about the Dow, Amazon is joining the Dow. They're going to remove, I believe it's Walgreens, and replace it with Amazon. This is big news. So Amazon's up this morning 1% over that. Just remember that the Dow is a different index than the S&P and the NASDAQ. It's not weighed, right? It's an unweighed index. So not all indexes are the same. I think this is good. This is really good. This is it's going to help Amazon a lot. So worth digging deeper into that. Don't hold it as truth that it's Walgreens, because I could be wrong on which name it's replacing. I just heard it before I started the stream, so I don't have that for a fact yet. I don't want you to spin up on the wrong direction, but I'm pretty sure it's Walgreens. We get the 20-year auction today. I know for the longest time, it seemed like I was the only person in the world that ever talked about these auctions, but it's starting to grow, right? If I talk about it enough, that's exactly right. The Dow stocks, well, value, blue chip, right? But if you think about it, what other names are already in the Dow, right? When you think about the Mag 7. So blue chip, value, think more blue chip though, right? Large market cap, mega market cap. So we got the 20-year today. We got some Fed speakers chipping their teeth, and we get FOMC minutes. Now, I've seen a couple of times yesterday where people were saying we had FOMC this week. We don't have FOMC this week. You have to distinguish the difference between FOMC and FOMC minutes, because those are two entirely different things. These minutes are going to provide insight that Powell didn't provide during his presser, and that they didn't provide at the release before Powell spoke. All right, so there's more information in here that's going to kind of shine a little bit of light on the dots, the forward projections, who voted on what, how much agreement there was, all of this, right? There's a lot more to it. Most people are already going to have the idea of what's in there. And I shouldn't have said people, most firms or funds, they have pretty good idea what's already in there, right? Because the data is out there, they can crunch the numbers for themselves. But for the you and I kind of person, they're just a retail Joe Schmo. The minutes help the masses. And so more information is good, but there's, a common phrase, sell into strength. Nope, that's not it. What is it? Sell the rumor, buy the news, or buy the rumor, sell the news, because it can go either direction. When there's an unknown that suddenly becomes known, one thing that we do usually get is a drop in volatility. Volatility generally rises when there's an unknown, and then falls once that unknown becomes known. We see it all the time with earnings. Earnings are an unknown, volatility rises, earnings comes out. We now know what was unknown, volatility falls. Simple, right? So at the very least today, we should see a drop in volatility. That's going to directly affect the volatility funds, those VC funds. If you want to Google that as a catchphrase, you'll learn more about volatility control funds, non-discretionary trading funds. Should probably lead you into CTA funds, and then you fall down the rabbit hole and off you go to the races. But this should provide a change in volatility. So we get the meeting minutes today. Sorry, somebody can't follow along. We get the meeting minutes today. That's going to be kind of a big deal, but bigger than that, bigger than everything else today and this week is the NVIDIA earnings. I mean, surely by now everybody's heard it. And I've heard ranges as big as 10%, which for something like NVIDIA, that's a pretty big range. Just keep in mind, when it comes to fear and greed, we talk about it all the time with hedging. If they've got, $100 million tied up into a transaction, they're not going to, and it took them 3 weeks to build it, they're not going to bail out of it. They'll just hedge it, right? That's what you do when you're worried. You hedge it. Hedging is insurance. So what usually makes price move very fast is somebody was offsides. A lot of somebody's are offsides. They think the job numbers are going to be really good. Everybody says, oh, we know they're going to be good. And then they come out bad and everybody scrambles and price moves really fast. Well, there's no way to predict in advance what NVIDIA is going to have for its forward guidance. We can kind of figure out what their numbers should be, could be, but not what their forward guidance is going to be. And so we can't anticipate the move, but we can hedge. And so if they hedge it to the eyeballs, then sure, it's going to have a big fluctuation at first, but the expectation that it can make these radically massive moves, not if it's hedged to the hilt, right? It's going to move. I don't want to make it sound like it's just going to doji or something, but temper the expectations of how far it could move. Even if you go back and look at earnings that surprised on companies like, Meta. Meta's been known to surprise on earnings. Even when it's something like that, if you look back at those rare times when something like Meta has a 20% move on earnings, what was happening first? It had a couple earnings where the moves were small. That lulled investors into not hedging. And then they get a surprise earnings. They weren't hedged for it. They're caught off sides and they got to scramble real quick. It happens every time, right? So if you bring in something like implied vol and you look at those ramps on the volatility, come on, Thinkorswim, wake up. You'll get an earnings that's lower vol, lower vol, lower vol, and then a surprise, right? Same thing, a surprise. It lulls investors for about a year. Oops, another surprise. So after that surprise, the next couple of earnings, everybody's hedged really hard, really heavy because, well, they got caught flat footed and they don't want that to happen again. So then they hedge. But remember, hedging is cost. It costs you money. Very rarely does it, quote, make you money. So with that in mind, they don't like to buy the hedges unless they have to because it's cost. So with NVIDIA, could it make a big move? Yes, absolutely. But NVIDIA's move alone really isn't the issue. And that's what you got to keep your eye on. It's not how much can NVIDIA move. It's what's up with the story. NVIDIA is the poster child for this whole thing about AI and how it, is the next stage of, business evolution, blah, blah, blah. If all of that starts to come into question, then this entire AI craze gets called into question. So not just what their numbers are, but what they say during that earnings announcement about demand, is it increasing, decreasing? Are they going after that global initiative that they had started kicking off like 6 weeks ago, 8 weeks ago? And how much demand are we getting out of that? So there's a lot to NVIDIA that could directly affect markets everywhere, not just our markets, but globally. And the indexes are going to take the brunt of that. So we are expecting the S&P to mostly run sideways today. That might change when we get the spot gamma founders notes for the AM edition and see where that zero gamma index is at. If it's really high or really low, +3, +4, or -3, -4. When we came in yesterday, it was really close to zero, like a neutral gamma. We're going to expect a hurry up and wait day for these NVIDIA earnings this afternoon. And a hurry up and wait day is where we buy weakness and sell strength and expect to play the range. It's the same bias that we had yesterday, but then we had that sell-off. And even with that sell-off, we still held last week's range. It's not the same kind of range, though. It's not as good. But there was a lot of weakness, which they cover in that spot gamma founders note from last night about this weakness and the volatility trigger, the zero gamma, the repositioning of the call wall and the put wall. So we've got our range set now. We just kind of zoom in here a little bit. We're, of course, inside the previous week. We're still underneath the volatility trigger. We're underneath now the 10-day moving average. We have an MDP, that's a missed daily pivot. It doesn't count until tomorrow, but we did have one already from yesterday. So we never did hit that daily pivot. That gives us an MDP for today. And so far, we haven't hit today's pivot point. It won't count until tomorrow. We're closer to the lower ADR than we are the upper one. So it's more likely we'll hit the lower one before we hit the upper one. If we hit the low one early enough, we can hit the other side. We're near that 20-day moving average. An argument could be made that we got there yesterday. We got pretty close to it yesterday. You can see it when I hover my mouse right there. We got near that 20-day yesterday. This white line is a voodoo line. It's the snow line. I don't name them. Right? It is what it is. And we're underneath the 3-week. Now that's a really fast moving average. Right? There's the 3. Generally, you put the 3 with a 10 or the 3 with an 8, and then you have, like a surge system. Price crosses the 3, then 3 crosses the 10, then, on and on. It's a whole thing. Moving average pairs play. But getting under or above a moving average is the start of it. And then how far away we get, blah, blah, blah. But we are under the 3. We got underneath it yesterday. We're still working at it today, kind of digesting that move. So we're looking to sell into strength, buy into weakness. Liquidity resides on the other side of the pivot. Try to remind you guys of this all the time so that every time you think about a pivot point, yesterday's low, yesterday's high, Globex low, Globex high, liquidity is on the other side. So when we get to yesterday's low, we don't expect to bounce right at that low. We expect to go through it because liquidity is on the other side. That is how we develop into a megaphone pattern where you have a range, price goes and starts to expand beyond that range just a little bit more and a little bit more, and it develops into a megaphone. At some point, it breaks the range and actually takes the direction that it's supposed to take. But till then, ranges get expanded a little bit at a time because price continues to seek out that liquidity. Volume's not as light as I would have expected it to be, considering the fear that's out there about NVIDIA. And in the futures, at least at this point, they're not hedging. But one of the things that I would encourage you to look for this afternoon is that they start hedging in the futures. They're going to start it probably later in the day, some point past noon. They're going to begin to prepare for, this threat of NVIDIA's earnings, and they'll do it all over the place. We've already seen them starting to exit out of trades that had been doing good since November, that strong rally up in all the Mag 7 names and everything else that had been doing really good. All the market leaders started to lag and get sold off. Makes sense. They're taking profits in case the entire market dumps. Some things are just better to close than it is to try to hedge. So after a magnificent run since November, a lot of those trades were just exhausted and overextended and ready to be closed anyways. But they're not going to close everything. And what they can't close, they'll hedge. So keep your eye on the indexes and start looking for hedging activity. In the S&P futures here, we just look at the options chain. On Thinkorswim, you'll see it. There'll be a market maker move tag right there. And it comes from the front expiring options having a higher implied volatility average than the next option series out. That's how we know that they're hedging in the front end. Now, that only relates directly to an options trade, right? So obviously, if they're just trading the futures, that kind of hedge, and it's a great hedge, that won't show up. They can just straight up, buy ES futures contracts or sell contracts to open. But options require less, right? Less margin, less carry. So even if you're not an options trader and you don't understand everything that we're looking at back here, nearly any platform that does options will have some sort of options average implied volatility on this one side or another. If the front one gets higher than the next one out, that's what we call a market maker move. You don't need Thinkorswim to see it, but Thinkorswim will actually show you that market maker move tag, right, in the options chain. Throughout the day today, we are going to get other data. The 20-year bond is kind of a big deal to me. They say you're not supposed to have favorites, right? Just like if you have more than one dog or more than one cat, you don't have a favorite, supposedly. But the 20 years my favorite. Come on, Thinkorswim. It's a laggy booger today. 10 a.m., 11:30, 2 o'clock, and then NVIDIA. There's Fed speakers as well that we don't see on here, but the FOMC minutes, it's kind of a big deal. So we're not seeing the 20-year in this label, but that's why we go through everything here, right? There's your 20-year right there, February 21. Now, it says that it's at noon, but this website reads my time zone, not the East Coast. So it's actually 1 o'clock. The 20-year auction is at 1 o'clock. And then we have Bosick at 8. He'll be coming on here in just a minute, actually. Shake the market up a little bit. So it's always good to look at multiple sources for your economic events. Every one of these sources kind of approaches it differently, right? They each have their own agenda. Sorry, we're underneath the weekly pivot point. That puts us in a bearish posture right off the bat. We talked about that yesterday. And the put wall is all the way down at 48.11, which is a cog line, center of gravity. That's a long ways off. They talk about it in Spot Gamma's founders notes from last night, that the roll that we saw in the optionality was muddy. There was no bullishness. It wasn't bearish. It was just confusing the way that all of these things shifted around in a way that they wouldn't normally shift around. And I attribute a lot of that to NVIDIA. Plus we had OPEX and everything else, right? So there was just a lot going on. You remember last week when there was some moves made on the call wall and the put wall that we were able to establish as really bullish or really bearish. And these moves are they're just muddy waters. They're not offering any insight. 10-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. It's a relatively narrow range right now, all things considered, for a 10-day range. And remember that this low that we're looking at, that wasn't the low at the time, right? I'm going to continue to remind you guys how to use this 10-day profile. You only want to look at it from where we are right this minute. You can't look back and say, oh, wow, I hit that low perfectly and it bounced, because that wasn't the low then. The easiest way to sort of wrap your head around this is every day at the same time, look at this thing, maybe take a picture. Take a picture every day for a month at, say, I don't know, 7 o'clock. And at the end of that month, look back at the changes from day to day. And you'll start to grasp this logic that it only counts right where we're at, right here. And you can't look back and see how it responded, quote, around these value area highs and lows. That wasn't the high then, right? That wasn't the low then. Nothing's going to change on the profile through the day today. We can see that this Tuesday's low, or maybe Tuesday afternoon, we've got a whole week before we get to this point. So we're not going to lose this bottom. And the only thing that would cause us to lose it is if price breaks below it. Same thing with this high. So the shape of our profile isn't going to change anytime soon. The point of control isn't going to change unless we stick to one spot and build it out. You know, a lot of times we've seen this thing change just because of the volume falling off as we get new candles, right? And then the point of control just say gets moved down here. It wasn't because we came back up and continued to hold out there and build it out enough to get the point of control there. It would be because we lost enough volume from that spot as these candles fell off the left side that became our point of control. But that's not going to be our new point of control. We're going to lose all of these candles, and then we'll lose that volume long before we lose all of these candles to lose that volume. So this point of control is going to be here. It's going to stay here for at least a week, unless we get a significant amount of volume, say at this level here. Say we just stay there and chop, and we start getting a lot of volume. Then sure, yeah, we'll bring that point of control down. Otherwise, 5043 is the point of control, and it's a ceiling. Now we can get through it, right? Any pivot point can be broken, but that is where the most volume happened. I don't want to say it's support or it's resistance or any kind of language like that. It is where the most volume happened. Think about your perception if that was your entry. If you were short and that's your entry and we get back there, you're going to be disappointed. You're probably going to close your short. If you're long and you got in there and we get back to that, you're probably going to be pretty happy to get out of that bag you were holding. Oddly enough, people would hold through that whole thing, pay the bag, and then get out as soon as they can without actually holding on for profit. But whatever, people don't do rational anyways, right? So that point of control is not expected to change anytime soon unless we build up a lot of volume somewhere else. We won't see it shift. We don't have a new VPOC from yesterday because we've already crossed through that zone multiple times, but it is worth pointing out that price has respected yesterday's point of control already this morning more than once. Now, the textbooks will tell you to carry forward this point of control, whether it's a VPOC or not. That's what the books tell you to do. Put on yesterday's profile, mark today's point of control on it. I don't do that. I've already got enough pivot points. But if we did do that, you can see how price already reacted and responded and respected that pivot point. So if you don't have enough pivots and you want another one, carry forward yesterday's point of control and the value area high and the value area low. The next one down is 48.92, which happens to be a cog line, right? All the 92s, all the 31s, all the 11s, those are cog lines. We're still within the weekly expected move. We're getting a little closer to that year-to-date VWAP. Remember when we called it back here that we were probably done with it for the first quarter at least, maybe even into the second quarter. I don't expect to hit it yet. Even with this weakness, I still don't expect to hit it yet. It'll all really come down to NVIDIA and its earnings. Their forward guidance can very well take us below that 4,900 level and get us down into that year-to-date VWAP. Not in one shot. I don't want to make it sound like, there's some kind of imminent crisis to price action. It's not going to be like that. But we've seen a broadening out of the entire marketplace, right? We don't want to lose that. Now, yesterday there was a growth value rotation, and that can get snubbed off this week, depending on what happens with NVIDIA. So we just got to kind of play it out. 49.50 is the weekly expected move bottom this week. Remember, price is going to close inside of this box 7 out of 10 times on anything else. It's a 1 standard deviation range. That's 68 point blah, blah, blah. Just round up and say 70%. Price is supposed to stay in this box by Friday's close 70% of the time on any other product other than the S&P. That doesn't mean we can't get out of it, just that we're very likely going to come back inside of it before the end of day on Friday. Now, because it's the S&P, it's actually even better than that. It's 80%. We have an 80% chance of closing in this zone Friday at the close. So if we wick out or move out, even like we did last week when we broached it on a Tuesday, we still got back inside and we closed on the week inside the box. There's a week where we didn't. There's a week where we didn't. A little bit of a hint there, right? One break and close outside once in a while. It happens. Statistically, it has to happen. What you don't want is repeated weeks again and again and again, over and over, back to back. That tends to signal that there's something going wrong between the implied volatility average that gives us this range and what price action is doing. Shows a blindness to the market makers being able to validate and measure volatility. We broke the streak, though. We had 2 weeks back to back, and then last week we closed inside the box again. So we didn't get that third week. But we also right now are not running at an 80%. It's running closer to like 60 or 50%. And that's not cool because, look, I can flip a quarter and get a 50% win rate, right? If this is supposed to close inside the box on Friday, 8 out of 10, count back 10 weeks. How many times did we close on Friday inside that box? If it's less than 8, then it shows what's going on. There's a disconnect between the volatility and the price action. We're 1.8% above the 10-week. So we've given a lot back. This has been, a nice kind of a gradual move back towards that 10-week. We need the reset. It's good if we're going to continue the move. So we've been in a topping pattern. We've had some bearish signals, especially on the weekly. We're due for a good pullback so that we can finally digest this run up and have another leg. Just like we had digestion here, moved up, digested it, moved up, digested it, right? This is just price action 101. So this is going to either turn out to be a topping pattern and we work our way back down, or this is just another digestion period and we work our way back up. Yeah, it is a massive head and shoulders that's forming, but we don't have the right shoulder yet. We have a head and we have a left shoulder, and that's it. Plus, a head and shoulders is like the most generic pattern that you could ever look at for an excuse to take a trade, especially on a daily or a weekly. They're massive. It can take a year, more than a year, for head and shoulders to play out on such time frames. What we have is a topping pattern, a digestion period, and it's either going to leg back down or leg up. We don't have to guess or assume which one it's going to do. We just trade whichever one we get. And it won't even be technical analysis that gives us the clues about which direction it's going to go. It's going to be NVIDIA's earnings. No amount of technical analysis in the world is going to tell us what NVIDIA's earnings are going to do. If you're dead set on trying to play that earnings, look around for ETFs that have NVIDIA in it. That way you can play your hunch or your assumption of what NVIDIA's earnings are going to do without having such a gigantic threat. I'm probably going to be looking at some butterfly plays. I put one on when NVIDIA was still underneath $500. The center of that butterfly was at 550, and it ran me over in, I don't know, like 4 days. It just ripped right through my butterfly. So I tore it apart, closed half the butterfly, the credit spread side, and kept the other one. I still have it. As long as NVIDIA stays above 520, the debit spread that I am holding will net somewhere around, see, I've got 19 for it. It's a 50-point wide spread, and I paid 19. So that leaves 31. Yeah, that sounds right. That's not bad. It'll close as a max profit as long as NVIDIA stays above 520-ish, I think. But in the later part of the day today, we'll try to build out some trades for NVIDIA. I don't think we're going to find anything even remotely close to a lottery ticket. I really think we have to look in ETFs that have NVIDIA in it and play it that way. Things that are down this morning, semiconductors, which makes sense. Bitcoin, uranium, the Mag 7, technology, and things that are up. Nat gas is up 10%. Yeah, okay. The China ADRs, I forgot to mention that. So China's been working on stimulus different ways, and it's not stimmy money like helicopter funds, right? They're not printing it and throwing money to the masses. They're just doing different things that are stimulating or attempting to stimulate their market and their economy. So they've been reducing, liquidity issues. They've been easing monetary policy. Their latest tactic at trying to help stimulate their market is they've made it, how did they say it? It's they banned selling of shares or stock or ETF. Their funds and their banks and their managers can't sell at the open and at the close. Right. And if you know anything about like market on close or the way that the funds and firms do a lot of buying at the open and a lot of buying at the close, because I mean that's where all the volume is at. You need the volume to handle the size of the trades that they place. MOC orders, market on close. The NASDAQ has a lot of great articles. If you go to NASDAQ.com and just search market on close or end of day volume, tons of research has been done on it. But that's what China's targeting right now as another way to try to stimulate or boost their stocks. Now, look, that's not the same as, say, lowering interest rates, which, if we were in a crisis here, that's what the Fed would do, right? They would lower interest rates. They would do bank bailouts, whatever it is that they have to do, right? The plunge protection team coming in and playing save a hoe and picking our market up off of the ground. That's not what China is doing. They're trying different tactics, like ordering their banks not to sell. That might hold them up for a little bit, but I mean, they're going to need something more than that. So we see that China ADR is up this morning. BABA, Baidu, JD, PDD, maybe some of the EV markets, NEO, XPEV, but just kind of keep in mind why they are up. That quote stimulus is not much of a stimulus. There's not selling because the banks were ordered not to sell. So, that's not the same as bullish. And really, outside of those, the China ADRs and nat gas, we really don't have much else that's up this morning. TrendSpider had a massive update, which is just really cool. I haven't had a time yet to set my dashboard up, but they've got this whole new dashboard that is phenomenal. These guys continue to impress me. They continue to update their platform, coming out with different tools, giving us, the user, the ability to make tools. Back testing integration has been built into this thing. It's got AI, so you can talk to it like a normal person and it'll give you code out of that. So if you're not a coder, you don't have to be to build indicators, to build your back tests. I love it. Silver isn't quite up yet enough, right? Our benchmark is 0.5%. We're just not there yet. But if silver continues with this push up this morning, it could hit our milestone or our benchmark of 0.5%. And that would kind of add to it too. You can see that strong base down here around that $20 zone, right? We've been lower than that before. I don't want to make it sound like we can't go lower, because we can, but that's a nice base. This has been something we've been watching to see if we're going to get that turnaround. We got the higher low. That's a good start. We got the higher high. So that's one of each, but we need a pair, right? 2 higher highs, 2 higher lows. And if we were to measure this from top to bottom, there's a half back that we got to deal with. And we haven't tested it yet, so we don't know if we're going to be able to deal with it or not. Still, it's a good start. It's a nice turn. We got the MACD trying to turn around and head back up. Remember, it's still primary downtrend, secondary uptrend. So that has to change, but it's a nice curve. It's a nice start in the right direction. And really, we don't have anything else up that's going to help. You don't want a stock market rally a bullish day that is fueled and run by pot stocks and solar stocks, right? That's just not what you want. So this is not a sustainable rally. We're not looking for any sustainable move today unless one of those Fed speakers says something that the market latches onto and breaks out to run up or down, or there's information in the minutes that really changed the hearts and minds of the traders at this point. And I don't see either one of those being enough with NVIDIA looming for us to really do anything. We need that earnings announcement. So that's what I got. Everybody be careful, be safe, watch the clock. We got the 20-year auction today. Don't forget. And I will see you all tomorrow.